Nvidia just built a $500 billion financing machine for continuing the AI trade. This is quite interesting, right? This is quite interesting, especially for Bitcoin. And I want to go through the nuances here and what it kind of means and what I think people might be missing as a result of this, right? So what's happening right now is that Wall Street is starting to finance the AI boom, right? These guys have got BlackRock, Apollo, Blackstone, Brookfield, Goldman Sachs, KKR. Everyone's involved to try and move $500 billion for AI infrastructure, right? Now, the company that's actually selling the chips is figuring out how to generate capital to fund the expansion, which will increase the demand for the chips that they're selling, right? Now, the problem with this is that, or really like the advantage here is that, AI demand is becoming very, very dependent. So the very thing that is going to lead to the payoff is becoming very dependent on credit, interest rates, the economics of a data center, the power, the utilization, the future value, GPUs. That's why you see, Nvidia always saying that, the GPUs are becoming their own market, right? So it's moving really from a technology story to a technology plus infrastructure plus credit story. And that's when things start getting interesting because Wall Street now has to get involved, right? And from what I'm seeing, again, I'm on vacation, but I'm addicted. I'm addicted to this. There's no way that I can not pay attention to what's going on in the market. I'm sitting by the pool, not today because it's a bit cloudy, but I'm sitting by the pool and I'm reading. I'm at the gym and I'm listening. I'm addicted to this. I'm sorry. Like this is how I'm addicted to seeing how capital is moving. So remember, look, so the capital chain, the Wall Street capital chain is very simple, right? Like Wall Street's financing the whole thing. Wall Street's financing the vehicles, the data centers, the Nvidia GPUs, the power, the cooling, the networking, the customers themselves of the AI, the revenue is all being financed. Everything is being financed. So the question really isn't, is this thing useful anymore? The question is, will it generate enough revenue and cash flow to justify the amount of capital that's committed to building it? Right. And that's really, what leads us on here because this capital is only accelerating. Right. And what that means is that, from a Bitcoin perspective, well, the fact that the first thing you got to pay attention to is the PMI number is actually accelerating. Right. So we've got capital expenditure, capital investment accelerating in an environment where the PMI number is accelerating through 50 and above 50. We got 55.6, right? Plus 50 is expansion, right? And 55.6 is a very, very strong manufacturing cycle that we've got going on right now. So, there's a lot of people that are in Bitcoin saying Bitcoin has topped because of a 4-year cycle. But I like looking at the actual capital cycle, not an arbitrary 4-year cycle, right? Now, some people might say I'm stupid, and at the end of it, this is one of the reasons why I say subscribe to the channel, because I might change my opinion and go, you know what? The only thing that matters is a 4-year cycle, right? But as of this moment, I like looking at capital cycles and confidence cycles and economic cycles, and none of it has basically led us to any kind of boom yet, right? It's all just starting now as we see the PMI numbers accelerating, right? Now, the good news is that Bitcoin historically tends to really do well when the PMI number is expanding, right? PMI numbers expanding signifies, liquidity regimes loosening up. You've got all of these things that drive liquidity that get better when the PMI number starts to expand. Okay, and so that's what we're seeing right now. And the PMI number is not rolling over, right? It's expanding. It's accelerating. So that's also a really good thing for Bitcoin too, and of course, for AI. So one of the things I was thinking about was, could AI potentially extend the Bitcoin cycle simply because of the increasing capex and investment that's going on, right? Because you're going to need massive amounts of spending on all this stuff, the chips, the data centers, the electricity, everything that comes with it, right? And now Wall Street is basically saying, we want in on the game and we're going to finance even more than this. So you're going to see more capex, more orders, more economic activity, right? Which basically kind of leads me to think like, okay, maybe AI isn't stealing the hype from Bitcoin. Maybe the hype just started, and maybe the AI trade is actually just, in addition to the debt refinance cycle, as Raul Pal talks about, helping extend the economic expansion that Bitcoin generally benefits from, right? So I think I think the lazy, I've thought about this. I think the lazy narrative is that Nvidia needs this funding because AI is a bubble. I think that's a lazy narrative now, right? I've kind of thought about this a little bit deeper, and I think it's a bit too simplistic. Um, I think that AI could be extremely successful and still need, a huge amount of external capital. I do think that what I said previously was that the politics is going to shift as we go into midterm, which is why I think this capital expenditure is being done now. It's really quick. It's happening right now, right? And I also think it's kind of, you know, equally lazy from a Bitcoiner perspective to say, AI spending is stealing attention from Bitcoin, right? Because the money's going into AI, right? Like, I think that's also a little bit mistaken, right? Like AI spending, the way they're spending it, the way they're creating all this credit, and remember also, they said that they were going to create credit for the real economy, right? Percent has been saying this. So what if this is the pathway for creating this credit, rather than just going out and doing, lower interest rates and stuff like that? So maybe this is the way to pump credit into the market, increase liquidity, right? So I don't think the question is like AI or Bitcoin and what's going to steal all the liquidity, right? I think the question is what happens to both of these assets as this manufacturing cycle continues to expand. But what's really interesting about this Nvidia thing is that, you know, it proves to you that all of this money, it shows you what really happens to all of this money when it hits actual scarcity, right? Because, if there aren't enough GPUs, right, Wall Street just finances more GPUs, right? If there's not enough data centers, you finance more data centers. If there isn't enough electricity, Wall Street comes in and says, okay, we're going to generate more electricity. Just finance it, buy it, done, right? Whereas you can't really, like, Wall Street financing, it creates more supply by financing the very creation of the supply, which then leads you to cycles in prices, right? And what they're assuming right now is that the demand is going to catch up to all of that pending supply and paid for supply that's coming through the financing. We don't know that. That's the risk on there, right? Bitcoin slightly works differently, right? Because no matter how many billions of dollars want Bitcoin, there's only 21 million Bitcoin. BlackRock can't make any more Bitcoin. Michael Saylor can't make any more Bitcoin. Goldman Sachs can't finance the production of more Bitcoin. So, capital, while it can solve AI scarcity in the moment, the real smart players know that it can't solve Bitcoin scarcity, which is why you've got people like Larry Fink saying nobody should be surprised if Bitcoin is $700,000 a coin at Davos, right? Basically, prices just continue to go up until a Bitcoin hodler decides to sell. And the beautiful thing over the last year is that 1.3 million coins have been moved from, the lettuce hands hodlers to the diamond hand hodlers, right? So look, there's a lot of things here that's going to happen, right? AI is going to become because the more financing gets involved, the more interest rate sensitive AI in its AI development is going to become, right? You also may see that, like I said, AI is going to extend this business cycle, and as a result of all of this, Bitcoin's scarcity actually becomes more valuable. Its store of value side becomes more valuable. And remember, markets are forward looking. So while they might be funding all of this for the future, markets at some point are going to go too much funding, too much money, et cetera, et cetera. We need to pivot, especially if you see that, the politics is changing, the narrative is changing. And then, of course, you've got such little amount of Bitcoin sitting on the sidelines outside of the hands of the the diamond-handed hodlers, aka the ETFs and the institutions, that you could see price become even more reflexive than it kind of has been, right? And I think that's a really I that's what I think is going on right now. I don't think AI is taking away capital from Bitcoin. I think AI is probably the thing that's like going to be extending this business cycle that we've had non-existent for the last since 2021. The 4-year cycle kind of tells you the calendar and the dates around it. I'm kind of looking at capital markets, right? I like looking at how capital flows. Um, and I think that the more capital keeps pouring into I think the more valuable eventually true scarcity becomes. And we all know, because they keep saying it, that there's only two futures for America. Percent has already said this many times. There is a crypto future and an AI future. These two things will be built at the exact same time. And so, as this business manufacturing cycle expands, you're going to drive hundreds of billions of dollars into Bitcoin as all of that new capital starts looking for the new store of value for this world, right? So I don't need AI. I'm bullish AI. I don't need AI to fail for Bitcoin to win. I think that's a very lazy argument that a lot of people are making. What I need as an investor is the capital cycle to continue. And it seems that AI is extending these capital cycles and these investment cycles. And as that happens, people are naturally going to start looking for great stores of value. And of course, Bitcoin is sitting there ready to prime, especially at the 200-week moving average right now. This is, one of those, again, Bitcoin's one of those assets that no matter how much money you shove into it, it's just always going to be the same amount of Bitcoin, right? Like, and that's absolute finality of scarcity, and that's the valuable thing. So I want you to kind of, think about the AI thing differently. A lot of people are saying it's a bubble, et cetera, et cetera. I want you to start thinking maybe it's actually expanding the investment cycle. It's definitely providing a boost to the manufacturing cycle. And at this point, the more speculation happens in AI, the more credit goes into AI, eventually that credit is going to start looking for a store of value, and Bitcoin is absolutely there. And everyone across the entire investment stack of people that actually move money, right, understand Bitcoin now. Right? We're not dealing with the same reality of 2021 where everyone's skeptical. You've literally got the C-suite of the US government, the C-suite of Wall Street telling you that Bitcoin is the thing, right? Bitcoin is the store of value. It is the digital gold, et cetera, et cetera. So I don't think that, this AI cycle here, whether it's a bubble or not, I would say that it's got a little bit to go. And if it turns into a bubble, it will turn into a bubble after the financing cycle. And the financing cycle looks like it's just starting with this MOU from Nvda and a $500 billion commitment. And of course, you've still got Anthropic's IPO coming and all that other stuff, right? If we start seeing these IPOs get knocked out, that's going to be a different thing. But right now, the markets seem very, very comfortable with absorbing these IPOs. And so if you're sitting in Bitcoin right now, we're sitting in a very sweet spot because the market is more educated, the capital is flowing, and Wall Street's now in on the AI stuff. So they're going to be looking for stores of value at some point once the financing is over bloated. I just don't know when that's going to be, but that pivot will happen at some point. And so the 4-year cycle crowd can keep watching the calendar. But now what I'm watching is the capital markets, because ultimately there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.